Hey, hi there, everybody. Welcome back. Good to be back. Ed Ponzi here, your FX educator, here on behalf of FX Street once again. Hey, wow, did you see that number out of Australia last night? This was unbelievable. Look at the full-time employment number out of Australia. And I'll tell you, this is the kind of thing where when people say, well, why do you worry about fundamental? Just a simple game of connect the dots here, gang. Um, Full-time employment in Australia, 74,500. This was a huge number. In fact, you compare that to the previous number, 38,700, which was also very good. And look what's happening to the part-time. I love the way they break it down. Every country should do this. Every country should, excuse me, should break down. Australia breaks down full-time and part-time. The U.S. does not. So they leave you guessing. And other countries leave you guessing. They shouldn't leave you guessing. They should tell you. Why not? You know, why not just put it out there? I'm just trying to pull something up because this was a huge number. Yeah, it was a huge number. And what does that tell you about, China, for example, right? It might tell you something really good about China. Well, just a little bit later, if you think about it, I mean, Australia is just a big mine where they dig stuff out of the ground. And at least a third of that stuff goes to China. So if they're hiring, and that was the second, I just found what I was looking for. I'm sorry it took me so long to dig this up. That was that number, 74,500, was the second highest number of full-time jobs ever added in Australia. Second largest number ever of full-time jobs ever added. So knowing what you know about Australia, if they're adding that many jobs in Australia, there must be demand coming. And since at least a third of the products go to China, well, not products, it's just stuff that comes out of the ground. It's coal, it's iron ore, and it's copper, mostly. It's gold, too, but it's, mostly it's coal, iron ore, and copper, right? So business is probably picking up in China. Why would business pick up in China? What does China sell? Let's keep connecting these dots. China exports stuff to everyone. Look at that. And just a few hours later, China exports up 16.4% in March. Much better than expected. They were only expected to rise 3.2. Look at that. Look at that big old 16.4 figure. All right, big spike. You're beginning to piece it together now. Okay, so if China's exports are up, that must mean what? Someone must be buying all this stuff? Who? Well, that's a little bit tougher to answer. Could be European, could be American, could be South America, could be Asian, could be anywhere. But it's good news. Can we agree on that? That if China's exports are jumping, and China has certainly at least the second biggest economy in the world and is the biggest exporter, you're the biggest exporter in the world, and your exports jumped 16%. That's good news for the whole world. It's good news for everybody. You see where I'm coming from? The pieces of the puzzle make sense. All going back to where? All these jobs being created in Australia. So why do they need all that coal? Because the factories are working overtime. Oh, and I just read an article that said the pollution just got much worse in China. Hey, I hate to see that. But it also tells me that business is probably getting better. If the pollution is getting worse, that means the factories are probably working harder. Now listen, folks, they got to figure out a way. They got to modernize the factories so that the factories don't pollute. I say they got to build brand new factories that don't run on coal. Might as well. You're going to step into the 21st century. You're going to be the world's biggest exporter. You're going to build entire cities. You might as well build factories, right, that don't pollute, because you're killing your population. What's the point of being the world's biggest exporter if you're killing your population? It doesn't make sense. You're poisoning everybody. It literally does not make any sense at all. You're defeating the entire purpose. So you figure out how to do it. Since you're working on such a big scale, there's got to be a cost-effective way to do this without poisoning your population. There's got to be. This is not the Industrial Revolution. This is not 1870. It's 2017. Okay? Got to be a better way. Just saying. All right. So these numbers, brilliant. Right? Brilliant stuff last night, early this morning, depending where you live. What's the trade of the week? China can do whatever it wants. Trade of the week was dollar CAD. But as far as this week, I think you got to be super careful because this week's over. This week's grinding to a halt, folks. You've got the Easter/Passover holidays, religious holidays coming up. Stock markets closed tomorrow. Forex is going to be limping into an early weekend. And I think people are going to hurt themselves trying to force it. My honest opinion. It's not the answer that you probably want to hear. But I'm not here to tell folks what they want to hear. I'm here to tell you the truth. Is if you force it right now, you're probably going to hurt yourself. The trade of the week was this guy. You were here on Tuesday. We laid this out. The initial stop was 132.47. Price shot down to here. We said we want to buy it as it comes up. We said one of the conditions of the trade was what? must come under 132.65 before buying, right? Left it right up there for you. Must come under 132.65 before buying, right? So what happens? It comes down to 132.52. That's right here. It's coming down. We don't buy it. It has to come under 132.65. That's this line right here. It comes under it. Makes a low of 132.52. Turns and comes up, hits our entry. This is where we get in. Comes up, lingers underneath our first target for an hour. Very frustrating. Then comes up, hits our target at 133.13. That's target 1, 33 pips. Target 2 is 133.80. Now, when it hits target 1, the stop comes up to break even. Stop comes up to 132.80. Price hangs around, and then Trump says the dollar is overvalued. Trump says US dollar is overvalued. Boom. Second half of the trade stops out at break even. Price hasn't recovered yet. If anything, if there's a trade here, the trade is to bet on a recovery, because really this gets knocked down 100 pips from Trump saying it's overvalued. But Trump saying that doesn't intrinsically change anything. Theoretically, it should still be up here. Right. Well, if you want to call that a scalp, 33 pips, some people would say 3 pips is a scalp. It depends on your outlook, I suppose. But I think there might be a trade here in the sense that there's really no reason why this is down 100 pips from where it was yesterday. I mean, just because a politician expresses an opinion doesn't mean that it should be 100 pips lower, right? Let's get back to this. But anyway, I'm not trying to force anything right now. But if I were trying to push something right now, I'd be looking for this to float back up toward where it was. This was here. Now it's down here. There's no real logical reason for it to be down here. It should be up here. You know what I mean? There's no logical reason for this to have moved down. Just because somebody expressed their opinion. I don't care if it's the president or a bus driver. It doesn't really matter. There was a good breakout at 133.48 to short against. What time frame are you looking at? I mean, I don't see like a big breakout here. Like, for example, I see resistance all through here at 50, right? Like, can't get through, can't get through, can't get through, can't get through, right? So if it could get above 132.50, then we might have a breakout. So you're looking at the hourly. I'm looking at the 15, but same thing. You know, I just dropped a line at 50. Let me put it exactly at 50 to prevent any confusion. Now look at this, right? Now the price just can't get through 132.50. So if this could get through 132.50, then I might be able to call that a breakout. And you might be onto something there. But as far as I'm concerned, this week's about over. because of Easter holiday, Easter / Passover, etc. A lot of people are leaving early. Stock market's closed tomorrow in the U.S. Perhaps, maybe the bond market too. I'm not sure. Okay. But let's just say if we were to do this as a breakout trade, how could we set this up? I love to do game plans. Let's do a game plan. Now, sometimes breakouts turn into fake outs. That's the risk you always take with a breakout trade. Okay? But let's call it 132.55. Because the price has not hit 132.55 since, well, 130. This one did not hit 132.55. The price hasn't hit 132.55 since this red candle on the way down. We see that? So we just came straight down and we've been trapped under 132.50 for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, for 17 hours now, for almost a full day. And if this doesn't execute, before the close today, I'm not heartbroken by that. I'd have no problem waiting until after the weekend to place this trade, if so be it. I'm okay with that. Let's try to define this range. Drop another line down here, sort of a borderline. Whoops, let me get rid of that one. Put this one down here. Call it, doesn't have to be, call it 25. It's approximately a 25 pip range. So our stop has to be under there. So just back of the napkin game plan here. If we put a stop at 132.20, we're clearly underneath all this mess. And if we have an entry at 132.55, we're clearly above all this mess. We've got that gives us a stop of what is that? 35? It's a 35 pip stop. So the risk is 35 pips. The reward is going to have to be 100 or thereabouts. I don't think that's going to be much of a problem, though I could be wrong. This looks like an area to aim for. That's 133.20. Does the risk reward even make sense? 133.20. This could be one of our targets. We know there's more targets up ahead because we had one yesterday from the earlier dollar Canada trade. So what's our risk reward here? It's 45 plus 20, that's 65. That's approximately 2 to 1. that would never do for the entire trade. But it's a start. Now let's see what else we've got going on here. Let's go to a longer time frame. So we've got the beginnings of a breakout setup here. I've got a 2-to-1 target. It's a very simple setup. No indicators needed. Nothing fancy. This area way up here looks like an interesting target. You see this descending trend line? We talked about this yesterday coming into play. We wanted to be up in this area, but we wanted to be, this is a great target up here, this descending trend line, but we wanted to be under it. We were actually talking about using 134, but we wanted to be underneath it. So we used 133.80. We can actually stick with that number. Go to a 120 here. This way we're under the descending trend line and we're under 134. So 132.55, that's 45 plus 80. It's 125 pips. That's better than 3-to-1. So I've got a 3-to-1 target. And again, this is not a trade recommendation. When you say trade of the week, I don't really do anything. I don't really do trade of the week or anything like that. I don't do trade recommendations. This is, my thought process. This is how I set trades up. This one, I might actually want to come a little bit lower. You see all this mess here? I've kind of got my target inside all this mess. I think I might want to bring this one a little bit lower. So instead of going with 133.20 and an exact 2-to-1, what can I do differently here? I'm going to bring that down. What if I brought it right to 133 even? I'll get it right. I can put a target right on a round number. I have no problem doing that. That's actually much closer now to a 1-to-1. But I have no problem with that because I already have a better than 3-to-1 target up ahead, so I'm okay with that. So here we go. And again, it's not a recommendation or a trade of the week or anything of that nature, but it's really a breakout trade. And if it breaks downward below 132.25, you just cancel everything. The assumption is that it turns upward and breaks up. There it is. So we shall see, right? There's a setup. Frankly, I'm in no rush. Things might just fizzle out this week. So there we go. There's our next Canadian dollar setup. Carlos, I'm looking to short Aussie yen, test and reaction off the 20-day EMA. Let's go to the daily. Aussie yen coming up on the and heading toward the 20. Let's take a peek. Moving average exponential. Is the 20 going to be money? Let's take a peek. So here's the 20. The 20's at around 84. Big green candle creeping up close to 83, so it's still got some ways to run. Yeah, I mean, I was looking at this one earlier. I was even thinking of like taking a shot on the 10-day because it's so darn far away. Perhaps Aussie CAD next week. Taking a peek at Aussie CAD. Yeah, I don't know. I don't see as much continuity with this one. Aussie CAD's kind of weird because it's commodity versus commodity. Gold's really strong. They're both gold producers. So I don't know if I have as much of an edge here. I think Aussie's strong today because gold's really strong. Perhaps Aussie CAD next week, shorting it above 101.30s. There's a lot of resistance up in this area. There's definitely like a descending trend line up here. Like boom, right there, and you got your moving average right there with it. So if I could get it up in that area, that might not be a bad idea. All right. Aussie New Zealand on the weekly. Looking to buy below 106, and there you go. There's your weekly, your 20-week moving average right near 107. 107.06 sounds awfully precise, man. What are you looking at there? I see 106.93 on the 20-week moving average. So, yeah, that's pretty cool. I don't know, man. I tell you what, that Aussie CAD looks intriguing. Although the tug of war, the only real difference between Aussie and Canada is oil. So it's kind of a weird relationship. I really like the Aussie yen setup. I like the way Aussie's moving today. They have the fantastic job figures. They have price of gold is rocking. Let's show you gold really quick here. Second. Boom. Look at that big explosion out of that ascending triangle on gold. I'm not long gold, but I'm long GDX. I'm long gold miners right now. I had a great trade on gold earlier, made money, bailed out of it. When this broke here, I caught this on a MACD buy signal right here. Wrote it up. It fell apart here. I got out, right? Then bought GDX. And now GDX is rocking. Got GDX here. Look at GDX start to go. So I'm happy about that so far. Although I'd have to say gold is outperforming GDX. But I'm not entirely, I can't really complain too much. It's good to have a piece of it anyway. It's at least not missing the boat completely there. All right, gang. It looks like that's going to wrap it up. Look at the time, man. Where do these sessions go? So hey, it turned out pretty cool. We got another dollar Canada set up. We took a look at a whole bunch of things this session, and just keep in mind, it's a holiday. A lot of banks closed tomorrow. Okay, a lot of banks are closed in a lot of different countries. Just keep that in mind, okay? Tomorrow. See this? Germany, Good Friday. Great Britain, Good Friday, etc., 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 etc. Means banks are closed, folks. When banks are closed, who are the big players in this market. They're the big banks, right? They're the ones that are throwing the billions back and forth across the table. And that means it's just not going to be that exciting. So be aware of that. Spreads are going to get wide. Just be super careful. It might not be the most exciting environment to be in. Okay? All right, folks. That's going to do it for me for this week. Thanks for listening. I'll catch you again next week. This is Ed Ponzi saying thanks for listening. Talk soon. Thanks again.